Morning, everyone. Welcome to our Future Fit webinar, Improving Business Efficiencies workshop. My name is Anna Christie. I'm the Chief Executive at the Sussex Chamber of Commerce. I'd like to take this opportunity to thank our sponsors, Wealdon District Council and Locate East Sussex, who have made this webinar possible. Before I introduce our speakers today, I would like to welcome Councillor Roy Galley from Wealdon District Council, who would like to say a few words.
Thank you, Anna, and good morning and welcome to everybody. I'm delighted that Wealdon Council is working with Sussex Chamber of Commerce and Locate East Sussex to put on this series of seminars. It's important that councils engage with business, but do this in a very proportionate manner. I don't believe that government creates jobs. It just creates the environment in which business can create jobs and get on with its function of generating wealth for our economy. Our job is really to signpost, to communicate, to facilitate, to support. And that, I hope, is what we're doing effectively with these webinars. Which of course have been, were originally going to go ahead as face-to-face meetings over a year ago and had to be cancelled. And then of course we reorganised them again and had to be cancelled because of lockdown. So here we are at last. So persistence and optimism has paid dividends. And here we are with the second in our series of business efficiency events. And this is where it's going to be focusing on business finance and business funding preparation. And I'm pleased that we have two well-qualified speakers today, Jim Fletcher from Locate East Sussex and Andrew Steer from Hsbc. And we've already had one workshop on business or operational efficiency, and we'll be having another one on health and well-being next week. So I hope you find this useful. And thank you to Sussex Chamber and Locate for working with us. And I think without further ado, over to our speakers to get to the meat of our meeting. So thank you, Anna, and back to you.
Thank you very much, Councillor Galley. I'd now like to introduce our first speaker today, Andrew Steer from Hsbc Bank, who's going to provide an overview of what funding options are available, which may be the most suitable now, and how to prepare in terms of your business funding preparation. So, Andrew, welcome.
Thank you, Anna, and yeah, a big thank you for allowing me to talk today. It's very kind of you. Thank you very much, and much appreciate both Locate East Sussex and Sussex Chambers' involvement today, and of course, very happy to be a part of this at what I guess is, as Councillor Galley has said, as a protracted event, but nonetheless one I think that hopefully you'll get some value from. Okay, so Improving Efficiencies Workshop, Funding or Borrowing for Business. Today's presentation, it's a fairly high-level presentation. I'll be honest, I'm here to give you a broad view of what is available for you and your businesses. There's no specific agenda really, other than just to give you, I guess, kind of pointers and give you some feeling for what I guess is available out there. All of these, these facilities are provided by obviously your incumbent banks or other financial services. So it's not specifically about Hsbc, but nonetheless, I guess there's a kind of standard high-level presentation. To let you know a bit about what I'm going to cover. So first of all, I'm going to talk a little bit about the categories of finance. Obviously, it would be very pertinent for me to cover off also the extra government support that is currently available in terms of funding for business at this incredibly unprecedented time. I'm going to spend a little bit of time just considering how to prepare if there's a funding proposition that you as your business has, what to sort of consider in the first instance, and then I'm just going to run through, I guess, some of the key parts of a business plan that will enable you to get down on paper your thoughts around that funding proposition, the business, and what the proposition holds for you. Then there's opportunity, obviously, for Q&A, and as Anna said, there is a Q&A button. If you want to put a question in at any time, please do, but there is an opportunity at the end. So let's move on. So in a nutshell, there are indeed two different categories of finance, the first being debt finance. Now that is, you repay an amount that you borrow. Obviously, as a lender, there would be interest and fees attached to that. The debt finance is normally over an agreed term from the outset and has agreed regular repayments throughout that term. There may well be terms and conditions of that agreement, of that finance agreement, and of course the business is expected to abide by those terms and conditions. They can be varied. There could be covenants, there could be provision of financial information in a quarterly fashion. There are various numbers of kind of terms and conditions, all of which I guess would depend upon the particular financial services appetite. And equally, there may well be the requirement to complete any sort of relevant security documentation alongside that. I'm sure that you are potentially aware that, or possibly aware of debt finance options. So initially and most commonly used around financing for working capital. This is obviously short-term working capital finance needs for the business, which as it goes through its regular day-to-day activities. Obviously, we have overdrafts, which is the most common short-term cash flow assistance, and is a revolving facility running normally for a 12-month term, but can be shorter in terms of if it's for a specific reason. But in general, they run for a year, and the bank would look to renew those facilities on an annual basis, depending upon the requirements and the needs of that business. Alongside that, clearly there are business credit cards. Equally, that gives a short-term period of interest only, which can assist with purchases, some purchases, and assist with travel, etc., and expenses for the business. And of course, there's factoring or invoice discounting, which again, suitable for improving cash flow, because this, as you issue your invoice, you issue your invoice into your provider, and your provider will advance funds to you, not having to wait for your debtor term to complete, i.e. 30, 60, 90 days. A good proportion of that funding will come to you from the moment you put that invoice into the system. It's a really popular way and a structured way, I guess, of leveraging asset, because most businesses have debtors, most businesses not all have debtors that are on the balance sheet, and actually it's a very effective use of those of that balance sheet asset. If you're trading internationally, there are import or export loans, and these tend to help and assist for the movement of goods through territories and borders, but in general are secured against confirmed sales. So you have a confirmed sale here in the UK, and you would purchase your product from overseas. The import loan would allow you to pay, and subsequently, once those goods come into the country and are sold under a confirmed contract, then those funds would be then used to repay the loan. Then there's the what I guess is again one of the common terms is your fixed term lending. This is fundamentally your medium to longer term funding, where again there's an amount borrowed over a period of time. They are either secured or unsecured, depending again on individual financial institutional appetite. And in some instances, there are leasing and asset finance options, which are suitable for a more sort of short to medium term financing for particularly purchasing plant equipment and vehicles for the business, rather than putting them over a longer term outside the life of the asset. These loans tend to be a shorter term finance to fit the depreciation profiles of the assets. Okay, the second category of finance is one that you may also be familiar with, is equity finance. Equity finance, you'd need to be satisfied that you'll need to give up a share in your business to an investor. There is no, normally there are no obligations to make regular payments, but you will be paying interest on the amount invested. The investor is clearly looking for a return over a period of time, which will come eventually through the sale of the shares. And in some instances, they would require some control over the running of the business and may well want to sit on the board as an investor. There are a number of equity finance options out there, and it's possible to look these to kind of search these out quite easily. But there was the main one is the Business Growth Fund, which is an independent organisation that's actually backed by the main UK banks. So they provide the finance into the Business Growth Fund, which looks to help and support businesses in the SME space and is looking to invest between £2 million and £10 million to help those businesses grow. There are then individuals, business angels, as they're generally called, who are happy to invest their money, their skills and their expertise, mainly in younger, more rapidly growing businesses. And of course, they are looking for returns on a more high risk opportunity. And in general, they are looking for their returns within 3 to 7 years. We then move into more complex investors around venture capitalists. These are professional teams who invest larger sums and will also give strategic advice to that business to enable that business to strategically grow over that period of time. And again, they would want to take shares in your business and certainly would want to sit around the boardroom table. As equally private equity investors, the private equity guys are generally looking for a medium to long term investment, and again, they're generally between a 5 to 7 year expectation of return. And more recently, and one that is very popular amongst small business communities, is of course the equity crowdfunding. So this is a digital channel, and it's an opportunity for individuals to raise finance by asking a large number of individuals to contribute a small amount of money each. It depends on the appetite of the individual, and you may well end up with a large number of investors in that instance, but each with a very small contribution. So I thought at this point it would be pertinent to refresh ourselves around the government initiatives, particularly on the basis that these have been recently extended. The British Business Bank, these are supported by the British Business Bank, and there are many accredited lenders that provide these loans to business. Of course, your first port of call for these should be your own incumbent bank. They are the guys that would understand your business and would be best placed to provide these products to you. So starting at the top, we have the what we call the CL bills, or the Coronavirus Large Business Interruption Loan Scheme. As it says by definition, for larger businesses, these are for turnovers in excess of 45 million, and the finance available is up to 200 million. Again, there are flexible products that are available, but the repayment term is fixed at a 3-year period. And as I say, there are many lenders out there that are accredited by the British Business Bank in order to provide these loans. And I would say at this point, absolutely go to your incumbent bank in the first instance. And as I said just now, all of these products have been extended and they're now available until the 30th of November. We then have the C-bills, or the Coronavirus Business Interruption Loan Scheme. This is more for the SME space and is in fact for businesses with a turnover of less than 45 million. The finance support value is up to a maximum of 5 million. And again, these are available as a variety of different products around, but a majority of these C-bills have been taken as loans. The first 12 months are capital, interest and lender levied fee free. All of those, the first 12 months of the loan will be no payments, interest free, capital free, and again, more than the number of accredited lenders that will provide that. These C-bills are again now available until the end of November. And again, talk to your incumbent bank. They are the guys that will be able to best placed to be able to help and support you with that. We've touched on equity funding, and the Future Fund is to support help support some of the businesses that have, in actual fact, gone into a more of an equity-based play rather than a bank senior debt lend. And there are loans that are available. Convertible loans, which are loans that can be converted into shares over a period of time. They are a maximum at 250, but there is available 125,000 up to 5 million in terms of funding. The third-party investors, those equity backers in the background, must at least match the government support. So it's a matched product. And of course, the British Business Bank says that businesses need to have previously raised $250,000 in equity investment. They need to have experience in this sector, in this segment. And again, like all the others, the Future Fund is now available up until the end of November. Finally, in the government incentives at the moment is the B-bills, or the Bounce Back Loan Scheme. These loans are available for SMEs, micro businesses, and other businesses requiring smaller loans. So actually that includes all businesses. If you need support between 2,000 to 50,000, then a bounce back loan is available. Again, term loan, it's fixed, it's repaid over a 6-year period. Again, no setup fees, and the first year's interest payments are covered by the government, with the repayments being made over the final 5 years. Again, extended until the end of November. So in all of those instances, I'm sure that potentially some of you on the call have already applied for either bounce back loans or C-bills. It's quite likely. I guess if you haven't and you're still considering, please bear in mind the cutoff date is now 30th of November, and your incumbent bank, I guess, will thank you for approaching them sooner rather than later on that basis. That as the actual cutoff for the banks is at the end of the year in terms of securing the funding. So I guess I'd also wanted to touch on what the sort of government support was from the British Business Bank pre-COVID, and I guess at some point it could and may well be introduced post-COVID. There was a product that was called an enterprise finance guarantee that helped support businesses that had a viable proposition, but unfortunately did not hold sufficient security to satisfy the bank's appetite. However, the enterprise finance guarantee was the government's way of supporting those businesses and providing a guarantee to the bank to enable them to provide the loan. again, those businesses were capable of having a turnover of up to 40 million, with a maximum loan of 1.2 million up to 5 years, and 600 if you wanted to extend that term from 5 to 10. And there was a 2% premium payable to the British Business Bank, which was paid on a quarterly basis. Actually, the Enterprise Finance Guarantee was a good product in supporting a lot of businesses in their growth trajectories, because in a lot of instances, whilst the proposition may well be viable, that there is security or a lack of security in the background, and bank appetite sometimes falls outside bank appetite, then this generally brings a lot of business the opportunity to take a loan that previously might have been more challenging. The British Business Bank also provided a business growth service. This was purely an advisory service, and as you can see, also from the UK Trade and Investment, again, advisory services for exporters and around trade finance. A lot of those services are still around, and you can find a lot of help and support on the Department of International Trade website, which will give you signposting to various support that is available. And equally, at this point, it'd be fair to me to say that the Sussex Chamber also provides a significant amount of support around, in partnership with the DIT. So, okay. So when you're considering funding, there are some initial things to potentially consider. For example, does your business have an online presence? Does your business have a LinkedIn profile? Do you have an up-to-date website? Do you use social media? Because in this at this particular time, it's essential to use all digital channels, as many digital channels as you can, I guess, to talk about your business. And if you're not on LinkedIn, you may consider joining. It's a great community, and is a good way of building connections. Consider getting your financial statements in order if they're not already, obviously. And I encourage you to engage with your professional advisors in this particular instance. A lot of lenders will want financial information, whether that be current or, in some instances, forecasting. So well worth reviewing those. And if there's a proposition, if there's a reason that you want to go to the bank to ask for some lending, some funding, it's quite straightforward. But ultimately, what is the purpose of the loan, and how will that loan help your business? And as I've said, consider current and projected financials, and of course, it's all about cash. Cash flow is king. If you can demonstrate that you have the cash availability in the bank to generate that cash over the period of time to support the loan repayments, then it's a much stronger plan. And equally, in some instances, and be prepared to provide some collateral. And we've already touched on the aspect of security. So please, be prepared to have that discussion, or at least provide some collateral. There's always equipment or real estate inventory to support the lending. We've talked about invoice finance, so that the debtor book can support some lending in that format if it's something that if it's a leverage way to raise finance in a very short term. And also, at this point, I would suggest that directors' personal guarantees, you need to be prepared to talk about those. So there are a number of reasons why write a business plan, and I think a lot of businesses talk about their business plan and put a business plan together, and potentially it's a document that may well come out once a year. But what I would suggest is that actually the plan will help you think about what you are doing and where you are going. It'll set out a strategy. It gives you an action plan. It's part of a process to help you achieve your goals and your objectives for your business. It helps you prioritize and focus on certain areas or indeed on certain ideas. Putting the plan in writing makes it easier to spot gaps, makes it easier to talk through where some of the issues are. And of course, once written, it's a benchmark of performance. It's your expectation of your business. And in some instances, it's well worth involving your employees in completing the planning process. I mean, these are the guys, your teams, by the way, are the guys that make it happen. So they need to have involvement, empowerment, and an understanding of the purpose of the business. And by doing that, they will have a part to play in that business plan. So that there's probably many different ways to put together a business plan, but for me, having viewed a number over the years, I guess keep the plan short, keep it succinct, focus on what the reader needs to know. Obviously, we don't need pages and pages, and attention to detail. Does it make sense? Read it through. A number of spelling mistakes over the years that can just quickly determine how much attention to detail, I guess, has been put to this. And of course, rather than creating large documents, it's always easy to put appendices at the end to add to where indeed, in terms of financial forecasts, in terms of some market research, CVs of key personnel. That's normally critical if you are looking at any outside funding, and of course any further information around your products or your services. And it sounds quite obvious, really, but base your business plan on reality. Growth is great, and actually that's what businesses generally aim to achieve. But be realistic. Understand that over-optimistic forecasts can lead to cash flow issues at a later date, and actually can counteract the proposition request and demonstrate a cash flow shortage at a later date. And in this day and age, make the plan professional and put a cover on it, contents page, etc. But generally, these are digital these days rather than manual. But yeah, and always consider starting your plan with an executive summary, which of course summarizes all of the key points, the purposes and the purpose for the requirement and the proposition. Outline the proposition. That gives the reader an immediate understanding of what the following pages are going to try and explain. Let the reader know all about your business. They want to know when it started trading. They want to know what progress you've made. What's the current ownership structure? What makes your products different? What advantages do you have? What changes and improvements are you planning? And of course, fundamentally how the proposition will change things going forward, and consider the market in which you wish to sell. Highlight the segments of the market that are good, highlight those that are where you are targeting, outline the important trends, consider the nature and distribution of your customer base. Do you have a heavy concentration of sales to one or maybe two customers? If you do, explain why, and that's not always a problem, but it's one where there's a concentration of sales, and as long as you've mitigated that through explanation, it's generally fine. Advantages and disadvantages of your product. Who are your competing? What are the competing products and services, and who supplies them? Moving on again to marketing and sales. Where do you position your product or your service in the marketplace? Is it high quality, high price? Is it specialist? What unique benefits do you offer the customer? How price sensitive are your customers? So plenty plenty in marketing and sales to outline in terms of your product and your market segment and your your target market. And of course, what channels do you use to reach your end customer, depending on your product and service? Is there an online presence? Do you use digital channels, social media? Do you have just client relationships? And of course, what are the positive and negative trends in those channels? Management and personnel. This is one of the really key headings within the plan. The lender would like to know all about those individuals that have responsibility for running the business. What skill set do they have? And analyze the workforce, how many people in which department, so is there a reliance on key individuals, and if so, how do you mitigate that risk? In terms of total numbers of workforce, and principally if there are shortfalls, if there are any risks or any issues, purely mitigate them to give the lender the understanding that you know that there's a problem, but or an issue, but you are actually protecting against that, particularly when it comes to key individuals. Particularly in small businesses, if there's a handful of individuals that are running a business, the loss of one of those can create a significant impact. That's something to consider. Again, around the operations part of your business, again, what premises do you have? What long-term commitments do you have? Is this where you wish to expand? Do you have a strong technology? Are your IT systems reliable? IT can be a really key strength, but of course it can also be a risk in terms of failure. So what kind of systems do you have, and what kind of protective systems do you have in place? Disaster recovery, that kind of stuff, and whether or not you have any regulatory standards, for example, ISO or CE approvals, really important. And of course, the financial performance, as we touched on previously, take the opportunity, I guess, to review the financial performance. You can go down into minutiae detail. I mean, for example, here it says break total sales figures down into component parts, i.e. different products to selling to different customers. I guess for me, it's about having an understanding of your product, where your margins are. If you're selling a product at a much greater margin, and you've got a number of other products that aren't creating margin, then there's kind of a question as to where you should concentrate some of your sales. And show the movement, overall show the movement in key working capital items. So obviously debtors and creditors, how quickly do you get your money? How quickly do you pay for your suppliers? So again, that is a cash flow aspect that needs to be covered. And again, as I said at the beginning, when you're building this plan, it's always advised to go and talk to your financial advisors, your financial team, your professionals, to talk this through. Obviously, providing up-to-date financial information, normally profit and loss and balance sheet. And in some instances, some lenders may want some cash flow forecasts, as I say, to demonstrate affordability. In general, forecasts are done for the next 3 years. If you make your forecasts and you show growth, make sure that you clearly state the assumptions behind the forecasts. Everybody knows that that the business wants to grow. This is how we're going to do it. But I guess it's more a case of what are the key assumptions. So growth by 10% on the basis of selling into 5 of our existing, increasing sales into a number of our existing customers. Have a reason, have a what if scenario. So if we do this, this is what we'll get. If we grow by X, this is where we go to. And again, use the professional advisors that you have. Finally, I think it's really also important that you take a step back and really understand your business and some of the external factors, and think about a one-page business strategy, what's called a SWOT analysis: strengths, weaknesses, opportunities, and threats. Take a look, review, think about those. Obviously, again, be honest about the threats and the weaknesses. It's all about spelling out the mitigating circumstances and the actions that you're taking in order to mitigate such threats and weaknesses. And indeed, the proposition may well enable you to do that. So always consider all of those quartiles equally. They're all just as important as each other. Okay, so that's a bit of a fly through. And as I say, I'm happy to take any particular questions at this point. It was a high level fly through, I guess, but happy to take any specific questions.
Thank you very much, Andrew. Lots of fantastic insights, takeaways. I'm just going to see if we do have any questions. I haven't had any questions appear in the Q&A, but just to ask you a couple of questions, and we can come to more a fuller Q&A session right at the end with both of you. I suppose, you've been approached by companies that don't really have that full business plan? Because really, having that full in-depth business plan, looking at your marketing, your communication, your cash flow forecasts, your sales, your competition, your management, and everything, it is fundamental in having all of that put together, isn't it, part of the business?
Yeah, thanks, Anna. Very much so. I mean, the whole thing about a business plan is that you get out, I guess, what you put in terms of it will give you focus on what you're currently doing. It will give you focus on where you want to get to, and it gives you a route of how to get there. And also will give you the opportunity to talk about, discuss, and hopefully mitigate some of those risks along the way. And those risks can be in any of those functions: operations, marketing. You kind of got to get it right. It's not a perfect science, so it really isn't a perfect science. It's just you are the individuals that understand your business the best. What you're trying to do is impart that to somebody who doesn't know your business. So really, by breaking it down into those sections, it does make it easier for the lender to get a clearer understanding.
Definitely. Also, going back to the different types of finance that you were talking about in terms of debt finance, have you, raising cash against invoices and debtors, the factoring or the invoice discounting, have you seen many businesses struggling with this in terms of their debtors are taking longer to pay their invoices?
So I think it's fair to say that short-term cash flow products have been impacted, because clearly, let's look at COVID and how it's affected business. It's affected business because they were unable to transact, unable to make sales, unable to buy a product, or at least at best they were delayed significantly. So yes, there has been some reduction, I guess. If you're raising less invoices, then you're obviously less able to raise working capital funding. Interestingly, there is within the government support, within the CBILS support, the purpose of those loans is really to help and support the cash flow gap that COVID has caused. So if there is an impact to any business that has been caused by COVID, if there is an impact in cash flow, so it might be that during a 6-month period, you reduced sales and you're down to, say, 30-40% of where you were. Subsequently, you're unable to raise as many invoices of value and create working capital for yourself. these loans, the CBILS loans and the bounce back loan schemes are basically devised to fill that gap. So yes, we as a bank, and I guess as a number of accredited lenders over the last few months, a number of bounce back loans and CBILS have been provided to fill that gap until such time as obviously business returns to being able to raise a number of, going back to a level of normality, I guess, with being able to use their existing working capital.
Thank you, Andrew. So hopefully everybody got some fantastic insights into the different types of finance available, whether that's the loans or overdraft credit cards or invoicing, and the government loans that are currently available for the next few weeks, but also how to prepare the for when you apply for funding, and really having that good business plan that really does cover every aspect of your business. Hopefully we will have some questions at the end. I will now like to introduce our next speaker, Jim Fletcher, who's the business manager at Locate East Sussex, who's going to talk to us about adopting lean principles to improve your business performance. Jim.
Thank you, Anna. Okay, it's always difficult to go on last, not knowing what everybody else is going to say. I wasn't able to catch up with the operational stuff last week, but certainly interesting to hear what Andrew had to say about funding and then the business planning. So maybe what I'm going to say might pull it all together. When I was a business leader, my focus was on long-term profitable, sort of sustainable profitability and long-term positive cash flow. So that sort of fits nicely into what Andrew's just said. And a lot of what I do at the moment is helping business develop business plans, often to look at funding sources. So again, that bit sort of fits in. But what I want to really focus on is how we can look at using lean principles in any business to improve financial performance. So again, looking at that long-term sustainable profitability, which should pull through positive cash flows. Okay, so on we go. Okay, now I was hoping that we'd have an audience. And when I wrote this back in November 19, when we were due to do the face-to-face meetings, I was going to ask people to wave their hands at me, and just so I understood what their view of lean was. So we're not going to do that. I'm going to make some assumptions. I'll tell you what those assumptions are. Because I was going to ask you a couple of questions. Who's heard of lean? And I suspect the majority of people would have heard the phrase, or they might have heard of agile, or they might have heard of BPR, or they might have heard of TQM or Six Sigma and Kaizen, continuous improvement. All these phrases are business phrases that, again, most people all have heard, and a lot of people might just say, particularly small businesses, it's not for me. So I was going to ask for the audience participation to say who thinks it's not for you, so that maybe I can ask that question right at the end of this presentation and see whether you still believe that. The other question I was going to ask is, do you think it's just about improving internal efficiency? Because often people think it's just about operational performance, and to a degree a lot of it is, but it comes from a much more business focused philosophy than just looking at operational performance. And again, do you think the principles apply to your business? And again, we'll sort of, hopefully through the Q&A at the end, we might get some views on whether I've changed people's mind on that or not. Okay, so let's just do the official stuff, the official definition of what lean is. And lean starts with the customer. So it's not just about operational stuff. It's not just about internal stuff. It starts with the customer. So we define value. We define value by asking, what does the customer really want? What does he value? Because if you're selling something to him, whether it be a product or service, he only wants to pay for what he wants. So if you're providing stuff or in your process that he doesn't really value, then again, you're immediately starting to do stuff that you don't need to do to deliver value to the customer. Now, you might need to do it to enable you to deliver that value at the minute. So the whole point is, well, how can you eliminate the stuff that you don't need to do to allow you to deliver the value that the customer actually wants? Then we've got to understand the processes that allow us to add that value. So again, this is when we start to look a little bit more internally. So we're looking at understanding how we deliver what that customer wants. And then we create flow. So we need to balance those processes. And that's looking at, again, the larger the business, the more departments we're going to have. And processes go across an organization, not up and down an organization. So we need to make sure that the capacity in each department is balanced, and the interface as we move stuff, whether it be paperwork or whether it be product from department to department, is done in an effective and efficient way. And we establish pull in the lean process. We only work on what customers want. We don't do stuff that's just going to sit around and wait. We only work on stuff that customers are going to pull through and want to take offers. And that's including the internal customers. A point at the end there. We look at a transfer from one department to another, or one person to another, as a customer flow. We're serving the ultimate customer through that process. So every step along the way is a step towards the ultimate customer. So we can look at the next person in our internal chain as being our customer. That one's a bit of a difficult concept for a lot of people to get their heads around, but that's the way that we try to think about it. And then we try to seek perfection in all activities. We try to eliminate all waste through breakthrough and continuous improvement. Breakthrough is maybe a large project, it may be an investment. Continuous improvement is just those independent, small but incremental little gains that we can make by just looking at what we do in detail and try to do it that little bit better. And that's what we mean by continuous improvement. So that's more of a formal definition of lean. So just to try and put a bit of spin on it from me, everything that we do should be customer focused. So it's not internally focused, it's externally focused to deliver effectiveness. We've got to strive to do the right things to serve customers, because at the end of the day, it's the customers that pay the wages, it's the customer that allow us to make sales, it's the customer that allows us to grow our business and so on, and make that sustainable profit and sustainable positive cash flow. We then need to look at internal focus on efficiency. So it's about delivering customer effectiveness, i.e. delivering what the customer wants and what he needs, and then doing it efficiently within our own operations and with what we've got that we deal with, our resources and our skills, to make those as efficient as possible, because the more efficient we can make it, the more money we can make. Now, most people, or a lot of people, would view this purely as a manufacturing or logistics tool, because everybody thinks of physical product. The key theme of what I want to talk about is to try to get the point across. It's not just for physical products. It includes service business. It includes any activity. It doesn't matter what business you're in. You can make sure that you've got your customer effectiveness better, and you can make sure you've got your internal efficiencies better. And I say the concepts can be applied to any business and any activity. Okay, so let's just look at the two words, effectiveness and efficiency. So what do we mean by effectiveness? It's a simple phrase. Effectiveness is doing the right thing. So doing the right thing for our customer in this concept. What we're trying to make sure is that the customer gets what he wants and needs. So we've got to do the right thing. Then we want to do it as efficiently as possible to allow us to be as profitable as possible. So another way of looking at efficiency and looking at the similar wording is doing things right. So effectiveness is doing the right thing for our customer, and then efficiency is doing things right internally to make sure that we are as efficient as possible in doing that effective delivery. Now, another audience participation question that I can't ask, and it would be very interesting to get a feel for this one, is which do you think is more important? And it's not a definitive statement. It's more of a philosophical question. But you know, if you are running a business or about managing a team in a business or whatever you might be doing, you've got to think about both of those. But you've got to actually probably think which is more important and which one needs the most focus. Okay, let's just work a little bit more on effectiveness then. We've said it's doing the right thing, but let's take it to the next level. So, effectiveness is measured by the extent to which an organisation delights its customer. So again, it's about customer focus, it's about customer delight, it's about wanting that customer to come back for more and giving us more business and being loyal and not always being picky on the best price or whatever. So it's how do we delight the customer to want them to keep coming back for more. And it's based upon several considerations, but begins with what the jargon word, customer value proposition. You may have heard that, you may not, but it's basically saying, what is the customer value proposition? It's defined by the customer. So he tells you what he wants. It's not your decision. You've got to help solve their problem, their want, or their need. You've got to find the solution that solves their problems and fulfills that want or need. And remember that customer perception is reality in their head. You might say, well, he doesn't need that. And I know he doesn't need that, but the customer believes he does. And it's very difficult to then go and tell that customer he's wrong. So you need to always bear in mind that customer perception is reality in his head, even though you may feel that it's actually slightly different. Without a winning value proposition, there's no organisation, is what the person that wrote this, and I picked this up from Business Enterprise Mapping that was written in June 2018. You know, they're sort of saying that if you haven't got a winning value proposition, then you're not going to win yourself, which is a fair statement, I guess. And then they ask this question: to what extent do you or does your value proposition solve your customer's problem or fulfill their needs? And again, that's a key thing that any business person, any business leader, any business owner really needs to think about and try and get their head around. And Andrew talked about business planning. That would be one of the absolute fundamentals of business planning. So when you're doing your market analysis and trying to understand which customers you want to target and who you want to serve, then maybe your customer value proposition is a key element of that business plan. So you can then identify who your true potential customers are likely to be. Okay, so let's move on to efficiency. And this is when we start going back to lean principles. You won't be able to read what's on the screen there, but I'm just going to go and put a list of them. These are the lean principles of elimination of waste. So what we're trying to do here is we've identified what the customer proposition is, we've identified what the customer want is. We're now starting to look at what is stopping us, or what are the extra things that we're doing that we don't need to do, but we can still focus on delivering that customer proposition or that customer service. So the wastes that are identified through the lean process are these. Defects, well, that's an obvious one. It could be a quality defect in a product maybe. So if you've got to make it again, that's absolute waste of material, because you've got to either rework, so that's time as well, or it's material waste that you've got to throw away because you made it wrong. Waiting time is identified. It's just sitting there. As I say, we need a pull system. It should only be moving and we should be doing something on it if it's actually going to be of use to that customer immediately or in the near future. Extra motion, moving stuff around, is just wasting energy and time. Excess inventory, having stock kicking around, it could go obsolescent, it might get damaged, it's taking up cash resources, so it's a waste of some resources. Overproduction, making stuff that you don't really need to make. Again, so it sits around in stock and it's taking up cash, and it might never get sold anyway, and then it gets thrown away, so it's just cost. Extra processing is very similar. Unnecessary transportation, again, is similar to extra motion, moving stuff around. Keep the process as tidy as possible, keep things close together, and that's just the same in an office as it is in a manufacturing facility. And then the big one about people. Andrew talked about when you're doing a business plan, again, looking at your HR issues and your skills and so on. Lean thinking identifies unutilized talents as a waste. So understand the talents of your people and use them to the best effect in your business. and a lot of people don't often understand or appreciate some of the skills that some of their people may have, because they're hired to do a particular job and that's what they do. But it's getting to know those people and getting to know what their wider talents are that then might be of benefit to the business in the longer term. Okay, now I'm sure a lot of you know this, but this thinking all started way back in the 50s with Deming, the American that went over to Japan and worked in industry in Japan. Toyota tend to be the one that most people talk about as leading the way in lean thinking. And interestingly enough, Toyota are very happy to share their thinking with anybody. They don't treat it as competitive advantage, which most people would do, but they look as it's a way of improving the way everybody does things. So they're happy to share their thinking, which is some people would class as unusual. You won't be able to read this. It's just a copy from a book, but the point of this is at the top there is customers. So again, it's customer focused, and then there's the things that underpin it, the pillars that underpin how you deliver to customer value, how you deliver customer value, and how you keep customers on board. Another way of looking at it is that what they call TPS, Toyota Production System, starts off at the bottom. Again, you won't be able to read it, but it says philosophy, process, people, and problem solving. So again, there's a philosophy that underpins it. You've got to understand your processes, how you do things. You've got to work with your people to, again, utilize all their talents, and then get everybody involved in where there's a problem, how do we solve that problem, and how do we make sure that that problem doesn't occur again. So sort of foolproofing technique that they call poka-yoke. So there's a whole battery. There's a book called The Toyota Production System that I would recommend anybody reads. It's easy read and it just makes absolute sense. So I say Toyota lead the way. Let's just focus now, because again, I've talked about this process being, or the lean thinking being appropriate to any business. And some of you say, but I don't make products, so the waiting time and the transportation time isn't really for me. And okay, so it doesn't fit every organisation, I totally accept that. But one that does fit every organisation is time. We all feel that we don't have enough time to get things done. So how can we find more time in the way that in the way we do our business to allow me to get more out, to make me more efficient as an individual, or my team, or my whole organisation? So let's just take one of the ways, which is waiting. I say another definition of that could be unproductive time. Therefore, it applies to any business and any activity. So I say, if you're a service business, this is just as important as you are if it was a manufacturing business or a logistics business. So if we think about how many hours we might work in a week, I'm supposed to be sort of semi-retired, but I probably still work 30 to 40 hours a week doing what I do because I enjoy doing it. But how effective and how efficient are those hours is difficult to say. So we need to try and find out or think how many of our hours that we work are truly productive. Now, if you're a service business, your goal is to charge for your hours worked. So the question is, how many of those hours that you work do you charge for in a week in the service business, in simple terms? So if you work a typical 50-hour week and you only charge 30 hours to client, then you're only 60% efficient. The issue then is, how can I get that 60% efficiency level up to 65? Because we're probably not going to get it up to 100, because there are always unproductive tasks that we all have to fulfill. So we have to have a view of, how do I minimize my unproductive tasks, and what is the sort of what is my target level I need to try and achieve to get from where I am today to where I think I can get to. And the other way of looking at it, and there's a well-being seminar next week. What if I want to work less hours? How can I be more productive in the hours I spend or could I bill the same by working less hours? So then I get a different lifestyle balance, because that's another way of looking at it. Andrew talked about, I've got to think about me sometimes. Well, thinking about me might be I need to work less hours, but I still might need a level of income. Therefore, I need to bill the number of hours I'm currently billing, but I need to work less hours doing them. I need to make myself more efficient in the way I do it. I wouldn't dare suggest that anybody's desk these days does look like that, but I have seen them. So how much time is wasted trying to find a document in that pile that you might need to do a job on today? Or I'm sure everybody who's listening has a desk like that. We've got a clean desk policy, and everything is at hand and where they want it. Now, of course, we probably don't have piles of paper on our desk these days. We probably have it on a database, or we have it on an IT system, but it's exactly the same. If our storage in our IT system isn't correct, we can still spend 10 minutes looking for a file that we think we know where it is, but it isn't. And that 10 minutes is just absolute waste of time. It's just simple stuff. If you're in a physical process, who's got a toolbox that looks like that? And I've seen many of them. In a lean process, it would look like that, where everything, you place for everything and everything in its place, so that you know exactly what tools you've got, you know exactly where it is, and you know if it's not on that shadow board, because if you take it off, there's a shadow of the product behind it in black or whatever color you choose to use, that says this tool is not here anymore, therefore it must be on my bench or somebody else has nicked it. So again, it's just simple stuff. It's not complicated, it's just thinking through simple techniques to help you become more efficient and save time. So again, how much time is looking for, how much time is wasted just looking for what's needed? You know, we wander around to pick up stuff to do a job. If everything was to hand and it was it was managed better, we can just save lots of time. So that's continuous improvement. But every 5 minutes we save is 5 minutes that we're not going to waste further down the track. So let's carry on with our waiting example. Do we know how long tasks that we perform should take? Do we have a standard? If we're performing repetitive tasks, do we know how long each one should take, so we can measure to see whether we're performing to our standard? So again, how much, so that would again lead to this question: how much more productive could we be with our existing resources if we had that standard and we made sure that we met it every time? So let's just look at a simple example. Now let's look at a small business and how it can improve profit. So a small business currently charges an average of 30 hours a week, which is what I mentioned earlier, charges £100 an hour for its service. So its maximum capacity for turnover on that basis is £150,000 a year. So a small business. With a lean intervention and looking at how the processes are carried out, the productivity might be improved by 10% by eliminating time waiting for files or passing paper on or whatever it might be, searching for information. And that will allow that business to improve its turnover to £165,000 with no additional cost, therefore £15,000 of extra profit, just by doing the lean intervention and just making them more productive. Now, that assumes, of course, that there's additional sales available. But the counter to that is, okay, well, if there's no additional sales available, I just need to work less hours to make the same amount of money. And that's the power of being able to look at it in this way and finding the interventions and the improvements that can be adopted that then get locked in, and then you start at a different base point to move to the next level. Okay. So I've just talked about some basic principles for a few minutes. That's basically the end of it. I just want to give some examples of where anybody can make a start in any business. Have a business improvement plan. Now, that links very neatly into Andrew's business plan. This is probably a bit more detailed. The business plan is a more longer-term strategic document. A business improvement plan is probably a subset of that. It's a more detailed short-term thing, but it might be part of a wider business plan. The strategy might be to implement lean. Okay, what are the detailed action plans that support that philosophy of that strategy? That's what the business improvement plan would be. That way we can do plan, do, and check, act. So we plan something, we plan to make a change, we make the change, we check the impact of that change, and then we act accordingly. If it's delivered what we plan to do, great, get on with it and do some more. If it hasn't delivered what we want it to deliver, then we need to put in some corrective actions. So the act bit is corrective actions to get us on track to where we wanted to be with the plan. So they're quite detailed plans and can be at individual level, can be at team level, but also could be at business level. What we call the 5S, find a place for everything in its place. I've tried to explain that's both for physical and for admin processes. So the 5S process is sort it, set it, shine it, standardize it, but sustain it. And a number of times I've seen people do these activities and you go back 6 months later and it's back to where it was. So the bit at the end, sustain, is keeping it there. So sort it out, set what you want to do, tidy it up, standardize it. This is where I want to be. So I've now got to take a photograph of it. This is where I want to be, and then keep it sustained at that level. And again, that's, I say, it's just the same for admin as it is for physical activities. Everybody can do work on understanding what their key processes are. So you can start at top line processes, but then work it down to every little thing, every little activity that you need to do. Challenge what you do. Ask yourself the question, do I need to do it? Is it adding value to the customer experience? If it is, can I do it in a better way? If it isn't, question why you're doing it. How can I eliminate doing this process? And it's amazing how much in any business time is wasted doing stuff that we really don't need to do, but it's so difficult to kick it out and do it in a different way. And it's finding the time, and it is a time investment to do the activity of trying to analyze what it is I'm doing, so I can then look at doing it better or differently in line with what customer expectation and customer need is. Involve all. If you're a one-man band, you've got to do it yourself, but there's outside help. If you're in a business with people, involve everybody. Again, Andrew made the point that in a business plan, you gain kudos and you get the support of your team members by sharing what it is and what you're trying to achieve as a business leader. So involve everybody in it, win hearts and minds, utilize all skills. And I'll just throw in a little example here. When I was running a business 20 odd years ago, I was doing annual presentations to staff. I was going around different teams and around the country to different teams around the country. And a week earlier, I think we'd published our quarterly news magazine for the business, and we got some photographs in there, which we'd had done by a professional photographer. And I was doing a presentation to a manufacturing team, and one of the guys said to me, "Who did those photographs?" And so I said, "Well, I'm a normal professional photographer." I said, "They're pretty good, aren't they?" He said, "Yeah." He said, "Yeah, but they're only for an internal magazine." He said, "I'm an amateur photographer. I would have done those for nothing." And he said, "How much did you pay?" I said, "I don't know, because our marketing team dealt with it." But I took the point he was making. For the purpose, the customer, i.e. internal communication, they didn't need to be professional photography. An amateur would have made an equally good job of what we needed, and he would have done it willingly for free in his own time, and he would have been motivated to be a team member. And we missed that at the time. We just said, well, we'd take our photography and give it to a professional photographer. So again, it's about understanding what skills your people have got and then tapping into them. And more often than not, if it's a hobby, they're going to want to do it and do it for free anyway in their own time. So it's not going to cost you anything. And they're going to be more motivated to be part of the team. So that was a big learning thing for me, to understand what skills our people have got and how we can tap into them, and how we can help the business make more profit and more sustainable, positive cash flows by doing things that way. So again, the lean principle there is absolutely to win hearts and minds of all your people, get them on board, get them understanding what it is that you're trying to achieve and how they can be part of that, and get them so they own it just the same as the business leader owns it, and they're desperate to make sure that those improvements come through just the same as the business owner is. Now, it may be a bit daunting because I've just run through that very quickly, and again, it's pretty high level stuff, as Andrew sort of said about the funding bit. But help is available. There are a number of people out there that can help businesses try to get on the lean journey. There's funding support available often to help that journey to get specialists in. So don't think it's too daunting. If you think that there's benefit to your business in looking at it, then pursue it, I would suggest. Okay, that's me done. So again, we're over to any questions.
Thank you so much, Jim. Thank you for that. Yeah, like you say, we all aim to increase productivity and our cash flow, but we have to do that and make sure we're doing things in an efficient way. We're not wasting time or resources, but we're also looking at the effectiveness of our services and products and making sure that there is value there for our customer. I know that one of the aims of government, of councils, and every business is to increase productivity, but we need to take that time to actually look at our processes. Where can we reduce our time? Where can we make things more efficient? So yeah, that's some excellent insights there. I do have not a question, but it has come through on the Q&A. That this is really supporting everything you have said, Jim. It's from Rob Little. Although there are lots of fancy theories and names that often scare people, the bottom line, it's all about common sense and having time so that all businesses and customer requirements evolve. So if your processes aren't evolving, then you're not going to keep up to date. You're just going to be left behind. So you need to keep ensuring that you are evolving, you're keeping up to date, you're continuously reviewing what you do.
That's a very, very valid point. And of course, markets evolve. And if we maintain the same way of dealing with that market that we have done for the last 10 years, then we might get behind. So it's how to have a continual process of reviewing your processes to make sure that they're still valid, that they are still effective, they are still efficient. And again, that means taking time out to do the process. But generally, there's something you find and something you think about that allows you to drive it forward and take it to another level. But you're only going to do that. It's a bit like Andrew said about having a written business plan that you can refer to. You need your processes written down, so you've got something that you're referring to allow you to say, how can I make this better?
And I think it is that constant review as well, because just because you have a process or a business plan in place doesn't mean you should just then forget about it, because there's always room for improvement, whether it's your how you do your finances, what's in your business plan, understanding what's happening in the marketplace and your competition. It is constantly reviewing and keeping up to date.
Yeah, and when I mentioned earlier the plan, do, check, act cycle, again, it depends what you're measuring, so how, and then the frequency of what you're measuring. And so some things will be done, some things you might measure daily, some things you might measure weekly, some things you might measure monthly, some things you might measure quarterly, because it depends on the type of activity and how quickly the impact of that activity is going to show through in terms of any change. But again, then it's about management accounting. It's about and what KPIs do I have a simple dashboard of 4 or 5 things that I measure that tell me whether my business is on track of where I want to be, or do I just wait till my accountant's given me some accounts in 18 months' time that tells me how much tax I'm going to pay? That is that managing a business, or is that the business managing you? So, there's a number of things we can do, but the simple business improvement planning process that fits into the main business plan on a detailed basis that allows us to measure performance in an appropriate way at an appropriate time and then make appropriate changes is what we're really looking at.
Definitely. I haven't seen any raised hands or anybody using the chat or the Q&A function. So before I bring this to a close, maybe just to sum up and summarise from both of you in terms of what businesses can get out of this and the importance of what they should be doing. Maybe if I can go to Andrew first, what would be your top 3 tips, I would say, in terms of what businesses should be looking at?
What a great question. And I think, as Jim says, it kind of knits together quite well in terms of efficiencies and processes and the business plan overall. And I remember some decades ago when I was a young whippersnapper starting up in banking, and my boss told me that one of the lessons that he learned very early on, and talking to business, is about how business needs to adapt and it needs to change. We've just had an incredible, unprecedented event, which has impacted every single business. Fundamentally, we can't prepare for everything. Okay, but what you can do is have an idea of the journey that you want to go on. Following on from Jim's point too, as I say, back to my boss, he basically said to me, if you always do what you always did, you will always get what you always got. So in a simple sentence, it's kind of think about where you want to be and steps to how you want to get there. It could be a really long journey, it could be a short journey, but you need to break it down into bite-sized chunks. How we're going to get there. The business plan will help you in terms of understanding your business and the journey and the steps that you need to take to get there, and will give you the opportunity to regularly review that. And every now and again you get a spanner in the works, so you go back, you look at it, and you revisit and you change. And there's no direct path to the end goal. You may need to turn left and then come back on yourself and turn right again. But what you have in terms of at least you have a plan, and you have an understanding. You and your team have an understanding of how you're going to make it, how you're going to achieve it, and you'll achieve it together. And as a team, that's really, really important.
Thank you, Andrew. And Jim.
Yeah, I couldn't agree more. And my summary of what Andrew has just said, and because I can't add any more to it, really, is there are three fundamentals that every business needs to understand. One is, what's your long-term purpose, what you're trying to achieve. Two, what's the product and market that you're going to service to allow that long-term objective to be achieved. And three, what are the internal resources and skills that you're going to need to match the opportunity that's in that market to achieve that long-term goal game plan. And as Andrew said, sometimes nothing works in a straight line, but if you've got that long-term objective, you've got something that sort of brings you back on track. And I hate using the word "we're going on a journey" because I think that's a terrible phrase, but it sort of fits this one. We know where we want to be, somewhere 1,000 miles down the road, and we know what we want to achieve out of it. And we've got a market that's constantly evolving, so that's going to move us around a little bit along. It's not a straight road, and then we have to adopt our resources and skills to enable us to utilize the opportunities that those markets and products allow us. And again, at the end of the day, we've got to keep our eye on it's all about making profit. And as a business leader, that's all I ever focused on. It's not all I ever focused on, but absolute reason for being there is we've got to make profit, because otherwise we're not in business. And we've got to make cash. So again, it goes back to Andrew and his funding bit. At the end of the day, funding is there to support projects in the short term. It's not there forever generally, because otherwise you've not got a sustainable business if you're forever just having to keep on adding funding to it. So maybe that's a bit simplistic, but that's sort of in my head. I've always focused on maximizing medium-term profit.
Excellent. Thank you so much, Jim. I'm sure everybody will agree that we've had some fantastic insights from both Andrew and from Jim today. I did share in the chat as well that currently we have got some free training which is being funded by East Sussex College Group, and that's on lean organisational management, level 2 certificate training for any businesses that want to go through that. Fantastic, it's free, so please do log into that. And we do have the third session on the Future Fit webinars, which is next week on the 4th of November, and that's on health and well-being. So please book on, and hopefully we'll see you next week. I'd like to take the opportunity to thank our sponsors again who have made this webinar possible, to thank both Wealdon District Council and Locate East Sussex, and a huge thank you to Andrew Steer and Jim Fletcher. Thank you very much, everyone.